Welcome everyone. Let's go ahead and get started. I am going to share my screen and we will get started. Okay, our topic for today is Banking 101. What we will be covering is essentially the basics of banking, a lot of the information that young adults, especially college students, do not know when it comes to banking. But before we get started, let's go ahead and cover a few points. The first is everyone is in listening mode only, so everyone has been muted. Questions will be addressed at the end of the presentation, but if you do have questions, go ahead and put them in the Q&A box, and they will be reviewed at the end of the presentation. And finally, this webinar is being recorded, so it will be viewable on our webpage, the TU website, as well as our TU YouTube channel. Okay, our objectives for today are threefold. First, we will cover the two main financial institutions, and those are the institutions that individuals normally frequent or open accounts at whenever they want to have a bank. And second is opening an account. What is required to open an account and which one is the best one for you? How do you determine that? Also, account management. Once you've opened your checking account, what are the do's and don'ts of having and maintaining a checking account? Okay, in the Q&A box, I would like for everyone to let me know what comes to mind when you hear the words bank or credit union. Oops. What comes to mind when you hear the words bank or credit union? If you don't mind sharing in the Q&A box. Okay. Okay, for some people, it is scary. For other people, it's a form of protection. And for others, some actually think that it's one of those things where you have to steer clear from. So for banking, when it comes to banking, a lot of individuals really do believe that it's something that really steals money from them and it should be avoided, where others feel that it's something that creates a sort of a safety net as when it comes to protecting their funds. Okay, let's see. Now, here are some benefits of banking. It's important to understand what the benefits are in order for you to actually decide this is something I want to do. Banking provides safety. For example, if you were to walk around, let's say you just got paid and you have $500 in your pocket. The possibility of being robbed may be high, especially in this economy, if someone who is in need knows that you have money on you and that individual has nefarious plans. So if you walk around with that amount of money on you, a lot of times individuals may feel the need to help themselves to that. Security is another thing, and we'll talk about that as well. Every bank and every credit union is required to secure, and that's secure individuals' funds up to $250,000. Okay, so it's kind of like an insurance placed on every account that is open. Relationship is another thing. When you open a checking account or a savings account, what happens is you start developing a relationship with that financial institution. So when there is a need, let's say you would like to borrow funds later on after your relationship has been developed, then banks and credit unions, one of the first things they do is they look to see how long has this individual been a customer of ours. And sometimes that helps determine as well. Convenience, you can access your account anywhere, ATMs, you can review your account online, you can review your account through over the phone. Financial future. With your financial future, you can start investing, you can start making your money grow. If you were to leave the funds at home, chances are, of course, you can add to it as you receive some, but the thing is, you will not receive interest. And also, there are other customer benefits depending on the type of account that you have. Now, let's talk about the difference between banks and credit unions. We'll start off with banks. For example, banks are for profit. In other words, they are in the business of making money. And when they're in the business of making money, usually there are shareholders. So banks have to perform in order for the shareholders who are owners of the bank to actually be able to receive the benefits of being a shareholder, and also for their share to increase as well. With banks, membership is not required. Anyone can be a member of that bank, a customer of that bank. And also, banks refer to individuals who actually opened accounts with them as customers. That's different for credit unions. And another thing is banks are regulated and supervised by the Federal Reserves. So there are certain types of rules and regulations in place for banks that credit unions really do not have to abide by. And as I mentioned earlier, banks are required to secure every account, insure every account up to $250,000. And the way you can tell that is by seeing this sign right here. It says FDIC. They are actually covered by Federal Deposit Insurance Corporation. Every bank is required to have that, and every bank must make it visible to their customers when the customers walk in. So if you were to go to a teller line and you're wanting to make a deposit or a withdrawal, every bank has to make FDIC, that sticker, that sign, visible for you to be able to see. Okay, and if it's not visible, you as a customer have the right to ask, are you FDIC insured? And can you show proof of that? Now, let's talk about credit unions. With credit unions, they are a nonprofit. So that means there are no shareholders. They're not trying to create a profit to make someone else, to increase the wealth of someone else. Membership tend to be required, but for many credit unions, for example, let's say Tulsa Teachers Credit Union, membership in terms of being affiliated with a particular group, that may not be required for a lot of credit unions. So Tulsa Teachers Credit Union, it initially began for teachers. It was created for teachers, but it has expanded to allow pretty much anyone to be able to have an account. Banks refer to individuals who open accounts as customers, whereas credit unions refer to them as members. So a lot of times you will see credit unions say this member of the credit union, as opposed to this customer that banks would use. And also credit unions, because they're not profit, they are not regulated by the Federal Reserves. So a lot of the federal regulations that are in place for banks are really not in place for credit unions. A lot of the taxes that credit unions have to pay, banks have to pay, credit unions do not have to pay those. But credit unions are required to insure every deposit up to $250,000, okay? Instead of FDIC, however, they are required by National Credit Union Administration. So you're needing to see that as well. NCUA sign that says that your funds are actually protected up to $250,000. What that means is, even if the bank closes, even if the bank goes bankrupt or the bank is bought out, or there is theft within the bank or credit union, your funds are still protected up to $250,000. Okay, let's talk about the pros and cons of credit union, because a lot of times individuals don't really know the difference. So let's start with credit unions. For credit unions, one of the benefits would be, because they are not supposed to, or they're not really trying to make money for shareholders, the interest rate that you tend to get on your checking account, depending on the account you open, or CDs or interest-bearing account, you tend to get a higher interest rate on those accounts. When it comes to loans and credit cards, you tend to pay a lower interest rate. Okay, so being nonprofit gives them a lot of tax breaks, so it can actually, what the banks, credit unions are doing is they're transferring some of those breaks onto their members. And also, because they are not so heavily regulated, there's a lot more lending flexibility. So when it comes to you borrowing, let's say for a car, a lot of times individuals will go to credit unions because they tend to have lower rates, as opposed to banks, where banks, because they're so heavily regulated, a lot of times when a bank will say no, a credit union will go ahead and take that risk. Now, the cons about credit union, the downside of a credit union is they tend to have fewer locations and fewer ATMs. And also, a lot of the online and mobile options that may be available with banks may not be available with credit unions. And additionally, fewer account options. Banks may have a lot more account options. Let's say, for example, money market, every bank has, and credit union has money market account, but let's say regular checking, higher interest checking, the types of checking accounts they have, banks tend to have a little more than credit unions would have. Now let's review credit unions. What are some of the pros? What are some of the, let's review banks. What are some of the benefits? For banks, they tend to have a lot more account and service options, as I mentioned, as opposed to credit unions who may not. They tend to have more locations as well. And you'll see a lot of those locations in places like Quick Trip or Walmart, and those locations are locations where individuals frequent most often. And that may not be the case for credit unions. And also, they may have a lot better customer service simply because they are open a lot longer, and whereas credit unions, their hours of operation may not be as flexible for customers. Now, the drawback is they have a lot less lending flexibility. So if you were to go to a bank and say, I would like to borrow money for a car, the chances are they have certain stipulations that they have to go by, they have to abide by in order for them to be able to lend to you. Whereas credit unions, as I mentioned earlier, those stipulations may not be as strict. Higher loan rates and fees. Remember, higher loan rates and fees increase profits. And when profits increase, shareholders get a lot more money. And also, as I mentioned, it is profit driven. Now let's talk about some of the products that financial institutions, whether it be a credit union or a bank, what are some of the products that they offer to customers or to members? First, there is deposit products, and that falls, the products that falls into that category is checking, savings, CDs, and money markets. Credit products, on the other hand, are products where you're actually borrowing, and you will have to pay those funds back. So you have credit cards, installment loans, line of credit. Those are the types of information where your credit have to be assessed in order for you to be able to be approved for the product that you're looking for. Now, once you have a product, it usually comes, especially when it comes to deposit products, such as checking, savings account. It usually comes with services, and usually those services are ATM cards, debit cards, check cards. Debit and check cards are used interchangeably. So debit and check cards, money orders, cashier's checks, And those are dependent on the type of accounts that you have. It doesn't come with every checking account, okay? So depending on the type of account that you have, you can get free money orders, free cashier's check, as well as online banking, mobile banking, that's accessible to anyone with a checking account. Bill pay is another option that you have where customers can actually pay their bills online once they access online banking. Direct deposit is another thing where once you get paid, your paycheck automatically goes into your checking account. And fund transfers, you can actually transfer funds. If you have more than one account, you can transfer funds from one account to another. Now let's talk about account opening. What should you expect before and after you open your account? First, let me ask you a question. What is the most important factor to consider when selecting a bank and when opening an account? If you can post your your answer in the Q&A box. What is the most important factor that must be taken into consideration when opening a checking account or selecting a bank? Oh, I gave you the answer. Your needs. Your needs are very, very important. And the reason why I say this is because a lot of times individuals tend to open an account because parents have opened an account with that bank and they've been customers for years. So a lot of times what meets your parents' needs may not necessarily meet your needs. Okay, so here are some things to consider before opening an account. First, banking information. What are the services that they provide? Okay, what are their hours? Since you're a student, are they open after your classes have ended? Okay, can you frequent that location? What are their lobby hours? What are their customer service hours, ATM locations? And also, if you're fluent in another language, can they speak that language? Do they have representatives that can actually speak that language as well? And of course, FDIC and NCUA insured. That's important, okay? Now, when it comes to accounts, what is the opening balance and the monthly balance that's required for you to maintain? Because if the monthly balance is not maintained, there will be a fee, okay? Also, what are some of the fees that are assessed? What are some of the fees that are assessed? For example, if there are some accounts, it doesn't matter whether or not you have a high balance, that account will charge a fee simply because of additional benefits that are provided. Also, deposit holds, and that's another thing that I will cover on another slide, where deposit holds mean how long after making a deposit, will you have access to your funds? And also, are there fee waivers? And fee waivers basically mean if there are fees to this account, what can I do to actually make sure the fees are waived? Overdraft protection is another thing. Overdraft protection is something that a lot of people find very beneficial, but also find themselves in trouble with, simply because with overdraft protection, a lot of times individuals use their check card or write checks without really taking into consideration of the amount that is left in their account. And when that happens, a lot of times they find themselves in trouble because even though it's a service provided by the bank, they charge for that service. And the average overdraft protection fee is about $30. And some customers, if they're not paying attention to their account, they tend to have there was one customer, I remember by the end of 1 year, she had about $5,000 in insufficient funds charge, which is not good, okay? So that is, for some people, you can actually pay something off or you can actually buy something, down payment on a car. $5,000 is a lot of money. Debit and check cards, How many ATM locations? Are there ATM locations close to the school or close to your home? How many transactions are allowed? Are there rewards for you using your check card? And when it comes to online and mobile banking, what is the availability? Okay, can you actually buy checks online? Can you actually take a picture of your check and deposit your check through your mobile phone? Or is that something that's not available yet? That's where the credit union and banks actually come in. Banks have implemented that already. Not too sure about credit unions. So those are some of the things to take into consideration. And when you do use some of their online and mobile services, what are the fees? Is it free, or will there be a fee for that? Other services to take into consideration, one is a safe deposit box. If you have valuables that you would like stored and you don't want to keep them at home, should there be a fire, should there be any form of property damage, it's good to have those items in a safe deposit box. It could be important documents like your Social Security card. It could be valuable items that you have. Those are things that banks can actually provide for you. So that's one thing to ask your bank as well. Prepaid cards. Are you able to actually have a prepaid card? Let's say you want to give someone some money, or you're wanting to stay within budget. Some customers actually use a prepaid card, put some funds on the prepaid card in order for them to remain within budget. The only catch to that is you have to know what the fees are, because with prepaid cards, there are some fees. And then you have person-to-person, P2P, and that is similar to Cash App, where individuals can transfer money from one bank to another without being charged a fee. And also money orders and cashier's check. We covered that. And here is a form that actually covers that. What you would do is you would go to 3 different banks, or it could be banks and credit union. The first bank, you actually go to them and you ask them all the questions listed here. Bank information, account information. You can ask them, what's the minimum balance to open? What are the fees? Are there fee waivers? And then once you're done with that section, you go down to overdraft protection. Are there alerts? Can I get alert before I get an overdraft protection fee? What are the fees for overdraft protection? And also, it asks about opt-out option. What that means is, by law now, prior to 2010, banks can actually add overdraft protection to your account. And overdraft protection is essentially this. When you open your account, a bank will say, we will give you up to $400 protection should you write a check, or should you use your check card and the funds are not available. Okay, so what they say is, if a check is presented to you, write a check and it's presented to us, and you don't have enough money in the account, because you have up to $200 overdraft protection, we'll cover your check for up to that amount. But there will be a fee. What you can do, I will go back one slide. What you can do is you can opt out and say, no, I do not want to have access to overdraft protection because I want to be able to manage my money, or I do not want to accumulate a lot of fees. Okay, so debit cards as well, ATM locations, is there mobile banking, and any other information that you would want to ask. Now, what exactly is required to open a checking account? Let's say you've gone through the process, you've identified the bank or a credit union that you would like to open your checking account or savings account at. What is required for you to open that account? Now, there are mainly 4 categories. The first is, you definitely have to fill out an application, because the application identifies things that are needed to be entered into a system in order for the bank to determine whether or not they will open an account for you. 2 forms of identification is also needed. For if you're a US resident, then you will need to have a Social Security, driver's license. Those are the 2 common ones, okay? Social Security and driver's license. If you're a non-US resident, you will need an individual taxpayer identification number, an ITIN, and that is usually issued by the government. But you will need some form of identification to prove that you are who you say you are. And you will also need to have proof of residence, and that could be a phone bill, credit card statement, anything that you receive from the school. If you live in the dorms and you receive mail from the school, you can actually use that as proof of residence. Now, if you didn't live there for 2 years, what they're requiring now is you have to live at that residence for about 2 years. If you don't have that, of course, starting school, especially this semester, what will happen is you can use the address that you've had before. And also minimum deposit, depending on the account type that you're selecting, what is the minimum deposit that will be required. And usually when you're opening a checking account, a lot of times what they'll do is they'll ask is, would you like to open a savings account as well? Now, once you have all the required documentation, what will happen is they will run it through a system called Check Systems or Qualifile. They're 2 in the same. Okay, Check Systems is basically an approval process that banks run their customers' information to, or prospective customers run their information through to make sure that that customer is a legitimate customer. 80% of banks use that, and it's called Consumer Reporting Agency. Now, for Check Systems, there is information. There's a lot of time individuals can find that there is derogatory information on there that can prevent them from actually opening a checking account. And the first is having bad checks, okay? If bad checks were written in the past, let's say you never owned an account on your own, but you were on an account with someone else who did write bad checks, maybe not intentionally, but the check bounced and that individual has never paid that check. So that is reported to Check Systems and it remains there until it is paid. Fraudulent check deposits, if your account has been overdrawn and closed by a bank, usually if an account is overdrawn for 30 to 60 days, the bank will close your account. And that information is reported to Check Systems as well. If there's any form of suspicious activity on your account, that is also reported. Identity theft, also reported, as well as anything that the bank deems to be something that is not positive. So usually when information is on Check Systems, it remains there for 5 years. And that's if it's been paid. If it hasn't been paid, it will just remain there, okay? But if it has been paid, it remains there for 5 years. Now, of course, after it's been paid, you can call the bank and say, look, I paid this outstanding balance, and therefore I would like to know if you can remove the derogatory information from Check Systems. Because once a bank receives your application, what they will do is they will go ahead and run it through Check Systems. And when that happens, it gives them a score. And it's similar to the FICO score for credit when you're applying for credit. The score is between 100 and 899. Depending on your score will determine whether or not the bank opens that account for you, because the bank usually sets a particular score range that they would want their customers to fall into to avoid risk. That is their risk model. They say, I would like, let's say, for example, I want my customers to be within a range of 600 and 800. If you fall below the 600, chances are they may not open the account for you. or they may review it to find out what happened for your score to be under the amount that is required. Now, the thing also is this: when you have been denied for an account, they will not tell you the reason why. A lot of banks do not tell you as you're sitting there the reason why. What they tend to do is give you a number to call, which is usually check systems, a number to call to determine, for you to find out exactly why you were unable to be approved. Okay, and as I mentioned, those are the categories: having derogatory information, not paying off an unpaid balance that is due, or having an account closed by a bank are some of the popular reasons why. Now, the thing is, once you've been denied for an account, you've been rejected for an account, you get a free copy of your credit report. So anytime you're denied, whether it be for credit, whether it be for debit meaning checking, you can get a free copy of your credit report. Now, let's go ahead and talk about, once you've opened your account, what are some of the things that you can expect to be able to do? First, definitely make deposits and withdraw money from your account. But some of the things that you will receive will be a debit or check card. As I said, they're used interchangeably. You tend to get temporary checks, and the temporary checks usually start off at a very low number, and a lot of times it may not have your name and address information, personal information on the check yet. Online and mobile banking access, usually what they'll do is they'll give you a username and password, and you would have to go home and log in with that information. Direct deposit is another thing that you have access to. Auto debit, where you can actually set up your account. You can set up your account to where the account can withdraw or make payments for certain bills. Overdraft protection, we talked about opting in, opting out. Opting in is when you say, I would like to have overdraft protection on my account. So that means if something is presented for payment, you don't have enough money, what will happen is the bank will go ahead and pay it, but charge you a fee for that. Opting out is when you say, I do not want the bank to pay for anything that I do not have funds for. And another thing that you must make sure that you have when you walk out of the bank after opening your new checking account or your new savings account is a disclosure, because the disclosure lets you know everything that you will be charged for. Okay? All right, savings account. The reason why I added a savings account is because usually when you go to a bank and say, I would like to open a checking account, a lot of times they'll ask you, would you like to open a savings account as well? Because when you open the savings account, usually when you do it together, the fee, the minimum deposit required to open a savings account tends to be less when you do it together. So let's say, for example, if you're opening a checking account and they say, would you like to open a savings account? They'll say, we'll just charge you $25 to open. The minimum deposit to open the savings account will be $25 because you're opening it together with your checking account. Okay, but here's the thing about savings account. The number of transactions that you have will be limited, okay? So that means you can, for savings accounts, you're usually allowed only 6 monthly transactions. 6 monthly transactions. So if you were to make a 7th transaction within that month, then you will charge an excessive withdrawal fee. Okay, and it's usually $2, $3, or $5, depending on your bank. After you've opened your account, here are some things that you must keep in mind. Ask questions if you're unsure about anything. Okay, if it sounds kind of new and kind of unsure, unrealistic, or whatever it may be, ask the representative, can you explain this to me again? A lot of times individuals may feel intimidated because they do not want to appear as ignorant. But the thing is, they are there to actually help you. I've worked at a bank for almost 23 years. My role was to assist customers. If they did not ask questions, they did not frequent the bank, I didn't have a job. So think of it this way. If you don't ask the questions, if you don't come in and say, I need your assistance, they may not have a job. Okay, several banks have closed, several locations have actually closed because the foot traffic wasn't there, or that branch was not being utilized, whether it be phone calls or whatever it may be. Those things are tracked by banks. So if you're unsure, call, ask questions. Review your disclosure, as I mentioned, because there may be things on there that you may find yourself being charged for that you never really thought about. Activate your online banking and also mobile banking because it makes it convenient. You don't want to have to run to the bank or credit union every time you have to deposit a check, okay? Because sometimes they may not be open. And begin using your account. Having an account helps you track your transaction. And also memorize your PIN number. Never write your PIN number down anywhere in case you leave your card somewhere and someone sees your card and your PIN number next to it. Never leave that available, and don't just give it to anyone, okay? Make sure it's just something that you know, and it's usually simply a 4-digit number, and nowadays you can pick that 4-digit number, so it's easier for you to memorize as opposed to the bank giving you a PIN number and that's what it is, okay? Now, let's talk about deposits. Here are some of the things whenever you make a deposit, you must remember. And a lot of customers get themselves into trouble because those are things that they never really thought about or may not have been discussed when they were with the representative opening the checking account. The first thing is deposit holds. There are times when you will make a deposit and the bank will place a hold on it. That means your funds, even though it's in the account, you will not be able to access it. That usually happens when you first, when you just open an account. And second, if you've been a customer for a while, what will happen is if the deposit that you make is a large deposit, there will be a hold place on it for a certain number of days. Usually they have to tell you the number of days. They'll tell you 3 days, 4 days, 5 days before those funds become accessible. Okay, so let's look at this right here, this receipt, deposit receipt. You see the deposit was made June 21st, 2017. But there's a notice right here where it says notice of delayed deposit availability. Date funds will be available will be the next day. Okay, now here's the thing. The amount of delay is not the full amount. Sometimes banks will, when you make a deposit, they'll automatically post $100. Make sure that's available to you. Let's say $500 deposit is made. They may post $100, $200, but hold off on the other ones. Place a hold on the remaining amount. Okay, usually when that is done, make sure the teller, if you go into a branch, will let you know. There will be a hold placed on this deposit and the deposit will be available on this date. And if they don't say it, simply ask, when will my deposit be available to me? Okay, now here's the thing. Once you start making that amount of deposit regularly and the bank sees that that is the type of deposit or the dollar amount of deposit that you normally make, there will not be holds because they're used to receiving deposits like that from you. Okay, now let's talk about return deposits. Let's say you make a deposit and the deposit doesn't clear because the person who gave you the check did not have the funds in that account, in his or her account. What happens is the deposit that you made will be returned back to that individual, and you will be charged a fee. Usually the fee is very small. It's about $3, $2, $5, but there will be a fee. If the deposit that you make does not clear, fees will start accumulating. And if it becomes a pattern, then the bank will look at your account for suspicious activity. Your account will be flagged for suspicious activity. Okay. Now let's talk about the difference between check cards where you sign for transactions or when you actually use your PIN number for transactions. Check cards, as I said, check cards, debit cards, used interchangeably, they mean the same thing. But there are times when you go to a store and they say debit or credit. And even though you have a check card, if there's a Visa symbol or a major credit card company symbol on there, they will ask you, would you like to run it as debit or credit? And when you use it as credit, here's what happens. It pre-authorizes your transaction. What happens is it looks at your account. Once your card is swiped, somehow it looks at your account to make sure those funds are available. Once it gets authorization that those funds are available, it will pre-authorize the transaction. And then once it pre-authorizes the transaction, your transaction is run through, you're good to go. But it will take a couple days, at least 2 days, for that transaction to actually clear your account. So if you were to go to Walmart, you purchase something for $50 and the cashier says, debit or credit, would you like to run it as a debit or a credit? And you say, I would like to run it as a credit. What will happen is you swipe your card, and depending on the amount, you may have to sign for it. Usually for a lot of stores, if it's under $50, you don't have to sign for it. So if it's, let's say it's $30, you don't have to sign for it. So the cashier swipes it, runs it as credit, and gives you your receipt. If you were to go home and check your account, you will not see it posted that day or even the next day, because sometimes there's a delay. There's about a day or two delay. That's different if you enter your PIN, okay? If you enter your PIN to run the transaction, that means the amount, the $30-something transaction at Walmart will actually pull the funds out of your account right away. So the amount will be posted to your account right away. Now, if it's the weekend, it will definitely post the following business day. So those are the difference. Signature, where you run it as credit, it takes a couple days. When you use your PIN and it's run as debit, it posts to your account immediately. Now let's review the different sections of a check. And I know not too many people are using checks nowadays, but there are times when we will find ourselves using checks, okay? The first line is the personal information line right here. Second line is the payee line, and that is who you're writing the check to. The third box right here is the dollar amount box. That's the amount that you're writing. Fourth is where you actually spell out, the fourth area is where you actually spell out the amount. The fifth area right here, the memo, is considered a reminder for yourself why you wrote the check. Sixth is the date the check was written. The seventh is your signature. And the eighth is the contact information of the bank. And right here, ninth is the routing number. That actually lets the bank know. The routing number actually lets the bank know which bank the check is linked to. Okay, so whenever someone asks you, do you have your routing number? Once you give them the bank routing number, they will know, oh, it's a Bank of Oklahoma account. Oh, it's a Bank of America account or a Chase account. Okay, so the routing number identifies which bank it is. The account number identifies which account is yours. And the check number, which is usually at the bottom as well as the top, usually lets them know how long you've been writing checks. Okay, that could be, you can easily manipulate that by letting the, when you're ordering checks, you can actually start your check number off at 1,000 or 500. Okay, and sometimes the last area, number 12, you'll see it here. What they do is they add a fraction of the account number or routing number together. Somehow they link it together. Okay, question for you. If the amount in the dollar box is different from the amount written, the amount in the box will be used. True or false? Remember, the amount that's written in the box is completely different from the amount that you have written out. True or false? The amount in the box will be used. Okay, the answer to that is false. Good job. Okay, second question, when a check is presented for payment without a signature, it will still be honored by the bank. True or false? Okay, here we go. The answer for that is false. One of the things that banks do is they actually compare the signature on a check. That is how they can actually see if someone has actually stolen checks and written the checks as their own. I have seen that done countless times where the teller will compare the signature on the signature card when the account was open to the signature that is on the check. And a lot of times that is how they can tell if someone has stolen the check and written a check as their own, or if the check is counterfeit. Now, here are some fees that are avoidable. Maintenance fees. A maintenance fee is usually for the checking account. If you have an account where you have to keep a monthly balance in there, then, and you don't keep that monthly balance in there, or it falls short of that, then there will be a fee. Okay, so find out, those are the types of questions that you have to ask in the beginning. If you're the type of customer or member that will not be able to keep a certain balance in your account, maybe having a free checking account is something that you may want to ask. But if you're able to keep $500 in an account, in your account, maybe that's something that you may want to evaluate and identify different accounts that can actually help you benefit by having an account that requires a certain balance. Okay, excessive withdrawals, we talked about checking accounts. How many withdrawals are allowed? For money markets, it's the same thing. Money markets are similar to checking accounts, but they're as savings account, but they're also viewed as savings as well. Usually you require a higher opening amount to have a money market and a higher amount for you to keep in the account to avoid a fee. Okay, and 6 withdrawals maximum, because, and the reason why maximum is placed on savings and money market accounts is because they see it as something that you've opened the account and it's needed for you. The purpose of opening the account is to help you save. So whenever you withdraw more than that, charging a fee is an incentive for you to not withdraw as much as you have been. ATM fees, if you use another bank's ATM and not your bank's ATM, that bank will charge you a fee. It's called an out-of-network ATM fee, and your bank will charge you a fee. Okay? Early withdrawal fee, let's say you open a CD, certificate of deposit account, and the term that you selected to leave your funds in there for is 6 months. But 3 months later, you say, I need access to those funds. There will be an early withdrawal fee, and that early withdrawal fee usually equates to 3 months interest. Card replacement fee, that's a new thing banks started doing several years ago, where if you lose your check card or ATM card, there is a fee to replace that, and it's usually about $5. And we already talked about, well, not in depth though. We talked about overdraft fees, and overdraft fees are essentially when you don't have enough money in your account and the bank goes ahead and pays for it. Now, here's the thing. Let's say you did opt out of not having overdraft protection, but something is presented for payment anyway. And let's say you write a check. The check goes through, is presented for payment, and there's not enough money. The bank will send the check back, but you will still be charged an insufficient funds charge. Okay, so those are conversations to have with your bank. When it comes to NSF charges, banks earn in revenue between 11 and 17 billion a year. Now, out of that 11 to 17 billion a year, $722 million of that are usually paid by college students. Okay, usually paid by young people who really don't know how the process works, how the system works. So a lot of times they find themselves paying fees that they did not think would accumulate. Remember that individual that I spoke about who paid $5,000 in NSF fee in 1 year. That's a lot of money, and that is making the bank rich. Banks actually call that fee revenue. So they're banking on individuals not being able to manage their account in order for them to make more money. Remember, for banks, they're in it for shareholders. They're shareholders. They have to make money for their shareholders. Let's take a look at what an account would look like if overdraft protection has been added. Okay, here's an example of a check that was presented and there was not enough funds. Okay, but let's look here. On March 13th, there was a balance of $12.02. But before the day ended, there was another transaction of $15.21 that was presented. Okay, that decreased the balance to $3.19. And then two other transactions for $1.50. It kept decreasing the amount. And right here, $24.09. But if you see here, it was returned, okay? NSF paid for the transactions. You will see $5, and it could have been for these small amounts here for $1.50. Because if you look further down, there's also a return fee, NSF return fee for $42.50. That is for the bigger transactions. And then you see $3.99, that was returned, but there was another $42.50 for big transactions, the $15 one and the $24 one, because it was presented even though it was returned. It's a little crazy how they're doing it. But that is how banks actually see it. Every time a transaction comes through, you don't have money, they will continue paying that transaction, but there will be a fee linked to it, associated with it. Managing your account. What should you do to manage your account? First, definitely create a budget. A budget is definitely needed in order for you to know how much money you do have in your account. Then track your deposits and your withdrawals. Review your monthly statement. With every account, monthly statements are given to customers. Make sure you review them, okay? Utilize online and mobile banking. Sometimes you will not have, you need to know how much money is in your account before the statement comes. So you can always pull up your account and review it. Every time transactions are posted, you will see it on your online banking. Opt out of overdraft protection because overdraft protection tend to get a lot of people in trouble. Also, link your savings to your checking, because when you do that, what happens is, ooh, what is going on? Sorry about that. When you do that, instead of you paying $30 for your overdraft protection that you have used because you don't have enough money in your checking account, when you link it to your savings account, the charge would be, let's say, $5, okay, as opposed to $30. And also sets alerts. Whenever you have a checking account, you have the ability to set an alert. Well, it will let you know that your account has fallen below $20 or $50. When you have the alert, you know exactly how much is in your account, and set it up to where it can actually ring to your phone. It sends you the alert on your phone, okay, instead of online, because if you're like me, you don't really see everything in time to prevent damage from taking place. So set it up for mobile banking where the alert is sent to you on your phone. And also, one of the best things to do to make sure you're on track on paying your bills on time is make sure you set everything up for automation, okay? Direct deposit, if you can have your direct deposit automatically sent into your checking account, or even having your, like I said, linking your checking and savings together. Now, if you're wanting to start saving, you can actually, whenever you have a direct deposit made, let's say you want to save $20 every paycheck, you can set that up to where $20 is automatically transferred into your savings. Okay, so those are some of the ways you can actually manage your account, manage your money. The first thing that I will always recommend is to create a budget. Once you have a budget, you're in control. That is, of course, if you use the budget. Okay, in summary, what have we covered? We differentiated between banks and credit unions. We talked about the different products and services that are offered by banks. We talked about deposits and credit. And we also talk about factors that must be considered prior to opening a checking account or any type of account, as well as selecting the bank that you plan to use. Because as I mentioned, a lot of students open an account with the bank, at the bank that their parents have utilized, but their needs and your needs may be different. Okay, next, we identified avoidable fees, fees that you can avoid simply by keeping track of your account or simply knowing that they exist. Then we reviewed overdraft protection and how it works. And finally, tracking and managing your money. Okay, as I mentioned in the previous presentation, we have, there are resources out there. Bucksford is actually, since you're our college students, Bucksford is good for anyone who are sharing expenses. It could be college students, it can be anyone who's not college students. If you have a roommate, you can share expenses. Mint is personal, where you can actually manage your own budget on your own online or even on a spreadsheet. Better halves are for couples, where you and your significant other can actually manage your funds together by using the envelope system. Now, Cash Course is new. Cash Course is something that TU is now presenting to students where they can actually manage their funds. Okay, so the link is here. You can actually click on it and access Cash Course, sign up for it, and start utilizing the service. Now, are there any questions at all? As I'm waiting for your questions, I will go on and let you know that our next lesson will be on car buying. What are some of the things that you need to know to make sure that you don't end up with the short end of the stick when it comes to car buying? And finally, here is my information. If you would like to get a hold of me, get in touch with me, my information is here. And finally, we would like to know your opinion. Was this presentation helpful to you? Was it not helpful to you? Your opinion is very, very valuable to us, okay? And I will go back now and check to see if we have any questions. Okay, I do not see any questions, and it is 5 o'clock, so I will go ahead and wrap up our lesson for today. And I hope to see you next week. Thank you for joining me this week.